Hey stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the Edge Finder, completely for free. Now how this works is basically you create an account and deposit a certain amount of money into that account and they will essentially buy the Edge Finder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the Edge Finder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the Edge Finder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream. Good morning, guys. Welcome back to another live stream. Thanks for being here. And again, like you saw in the opener, if you want to check out 8cap, link is in the live stream chat for that. They do also offer you basically the ability to get a bunch of stuff for free from our store. They basically buy it for you, which is not too shabby of a deal. Good to see everybody in the chat. Bunch of people. What's up? What's up, everybody? Good to see everyone here. A lot of our regulars in the chat. Good to see you. So let's talk about what took place yesterday. Kind of an interesting intraday development. Yesterday, we went from very red to pretty green on the day. It was an impressive bounce. We actually tapped on a lot of the indices. We tapped a 200-day moving average level. So check this out. On the S&P 500, we tapped a 200-day moving average. When we take a look at the Nasdaq 200-day moving average, the Dow Jones tagged that 200-day moving average. The Russell tagged the 200-day moving average. And then we had a pretty sharp rebound off of commentary from Trump, basically doubling down on the idea that disruption to oil is something that, you know, they are very much going to find ways to contrast. We also saw a big, sell-off in the price of oil yesterday in response to the G7 nations discussing tapping into oil reserves in order to cover for the disrupted oil supply chain from the Strait of Hormuz. In aggregate, in total, for what that left us with, it left the markets feeling very much like a weight had been lifted. However, is it all sunshine and roses? Well, here's the tricky part. It really comes down to not if the G7 nations, release oil reserves in order to cover the, supply of oil in the meantime. While that is, of course, a short-term mover of oil and of the market, the bigger question here is whether or not the conflict in the Middle East is going to be long and drawn out or short. Now, commentary yesterday from the president made it seem like him and his team are very much interested in making it a short conflict. Now, of course, that's what anyone says all of the time around conflicts. It's going to be short. It's going to be decisive. I also saw something that was interesting. Somebody did like a study on the number. This is weird that we talk about this stuff, but it's markets. The number of missiles coming out of Iran has diminished over time, as days have passed, suggesting that Iran has, they're running out of powder, basically. So there's that side of things. There is, of course, the president having midterm elections on the way, coming November of this year. So you have all of this spinning. If you're the president and you want to win the midterms, if you want to get the vote, right? What do you have to do? You have to keep people happy. You have to keep people on the thought process that what is being done by the current leaders of the United States, your party, is effective. If gas prices shoot up, people are not going to like that. That sways the vote real hard, because in America, for the average American, the price of gas is one of the most volatile and easily felt components. People complain like crazy when gas prices go up, and they are likely to go up. Now, they could stay up if this conflict in the Middle East is ongoing. Alan says some of the A1 members in the Discord near Kuwait and UAE have reported a lot less activity as well. Interesting. Yeah, I mean, I obviously don't have any exposure to what's truly happening on the ground, but again, we're getting reports that the activity has slowed. And so, that's the thing is, the other thing is, if you are pointing to Trump's commentary, you can kind of see that Trump at any point could claim quote unquote victory on what is going on. I have no idea. It sounds like that the U.S. has been very successful already, not just from Trump, but of course Trump can, when you listen to him, he will talk up, as any president will, but him especially so. The claims, the victories, etc. So it's at any point he can kind of declare victory, and we can move past this. That's the scenario we're looking at. Anyways, the S&P 500 did rebound yesterday, and I have to tell you, I actually did take a small short position yesterday on the Dow Jones. So I went short the Dow Jones for a couple of reasons. This is, well, let's stick to the script here first. Dow Jones, why did I get short? Well, there's a couple reasons. From not looking at geopolitics for a second, let's just take a look at the data, the economic scorecard here that we have within Edgefinder. I have a -5 score here. Economic data is sort of mixed for the stock market right now, because we did get some strong data points from PMIs last week. PMIs were very solid. That's a strong indicator of the economy, forward looking. So we got good readings there. However, GDP was a little bit lackluster. And of course, last week, the headline, the big one, was we had a very poor jobs report. That is concerning, because you have some sticky inflation going on, a rising 2-year yield, and weak jobs report data. Now, why it's not this more negative score here for stock indices is because we did have a good round of economic growth data to kind of counterbalance that. When you're looking at fundamentals, when you're trying to build a macro picture, you can't pick and choose. You kind of have to take a look at the aggregate level, right? It's easy here's the problem with fundamentals that a lot of people get into, right? Just like with technical analysis, there's subjectivity. Fundamentals can be highly subjective too. If I only looked at these metrics right here, guys, I could paint a very bearish picture for the stock market. I could say stagflation, because we have high inflation and we have poor jobs data. What I try to do, and why I think that I have been more successful through macro using software specifically, is because there's no bias here, right? When I'm looking at this scorecard giving me a +0, the scorecard is giving me a +0, not my bias, not my internal, oh my gosh, that jobs data was scary, right? You can do that with fundamental analysis. You can totally take fundamentals and pick and choose to paint a narrative that you want to choose. And so what I try to do is this is my scorecard. This is my grading system, right? This is why I never leave home without my Edgefinder. Literally, it's on my phone. I always have this, because if I just go off of my gut feeling of fundamentals, then that's what I would say. I would say inflation looks rough, jobs look rough, bearish. Now, why I can't get ridiculously bearish on the stock market indices is because we also had strong growth metrics in the PMIs. Consumer confidence has been lifted here recently, retail sales. And so if you are somebody who trades off your gut feeling or just off your bias, you would just be like, oh, no, well, don't pay attention to those things. Let's pay attention to this, right? Be careful with that. That is why we scorecard this stuff out. That is why we do not trade fundamentals without tools. Tools keep you in check. So, do I have a massively bearish fundamental outlook on stocks? No, but there is also a technical breakdown that I like. There's also seasonally a rough period of time here this year. And I also I happen to know here that this year, the midterm years, typically midterm election years are pretty lackluster stock market years. We also have some momentum here to the downside that I think is worth a small stab on the short side of the Dow Jones. So yes, I did short as we came back up. I did not short yesterday towards those lows, right? I pointed out in my Discord, if you remember in there, we chatted about it on the Sunday Open. I made the point that a lot of times how these things typically happen when you get the Sunday night open and it is a terrifying headline and everyone freaks out and hits the sell button. A lot of times the market loves to play gotcha and short-term rebounds. Now, we could see more rebound, in which case I'll cut the trade. I'll just take a loss. It's a small risk on the account and I'll take that loss if necessary. But as we came back up into this resistance point, yes, we had Trump commentary that soothed the market short term, but I still think you have real risks on both the geopolitics, some of the macro looking lackluster. Technicals, I still think have some potential downside swing to them, seasonality to the downside. And we saw institutions continue to pile on more bearish exposure on the Dow Jones. So all of that to say, I have a bearish outlook for now on the Dow Jones with a willingness and an open-mindedness to say I was wrong if we break through these highs. Does that make sense? Hopefully that, kind of clarifies a breakdown as to why I would take this short position. The other reason is I think we had a 50% to a 61.8% retracement on this 4-hour chart move. You can see we came back up into what was previously support, rolled over, broke to the downside. So I would nullify this trade idea and take a loss if we were to see this kind of move. So I hope that makes sense, but I wanted to break down the Dow Jones trade as to why I took that. And we'll see what happens with it. Now, I also want to clarify that I'm not just outright super bearish in the indices either. I also have some cash secured puts sold on things like SPY. I sold the April 17th 655 puts. This is a bullish play. That's a bullish options play. If you're selling puts, that's a bullish play or a moderately bullish. Basically, I make money anywhere between here and 655. I lose money if we start going below 655 meaningfully, which could happen. But again, I'm kind of hedged, right? To an extent, there's a bit of a hedge there in the sense that I am short the Dow and I have a slightly bullish leaning position on the SPY, a neutral to slightly bullish position on the SPY. Dollar index here, continuing to respect resistance. We are seeing price come down a little bit from that 99.5 level. Look at the wicks along the top here. This is a very clear level. I mean, look at the way this market has rejected the 99 to 99.5 range on the dollar index. I think part of the reason, had you seen a strong jobs report, I think this thing would have flown through those highs. And we still may continue to see some dollar strength. But for now, when I look at US dollar getting a +4, you can see we're hampered here a little bit. Fundamentals still overall look positive for the dollar, which I know sounds crazy given that we had a really bad jobs report. But again, going back to what we just said about fundamentals, we cannot look at fundamentals, pick and choose selectively what we want to look at. We have to kind of look at the big main core components to build a bias. So yes, NFP was bad, right? unemployment rate also ticked higher. Also, this is totally a bug. We did not have a 6.3% forecast, and I need to screenshot that before I forget, so that I can take a look at that with the developer after this. Hold on, guys. I want to do that now before forecast for unemployment rate, US dollar. Okay, we'll get that sorted. Not sure why I've never seen that happen before, but it's got the wrong forecast in there. Anyways, regardless, it was a rough jobs report. However, you also have inflation sticky, which I think, especially with this oil price shock, this is dollar bullish. Okay, so if I explain that, like oil prices remaining elevated, if you continue to see oil be bid, that is bullish for the dollar, right? Because it means the Federal Reserve will be very unlikely to cut interest rates given a drawn out conflict. We saw that in 2022. We also know, historically speaking, we talked about it yesterday, that when you have, historically speaking, there was an instance in which case the Federal Reserve, I believe under Alan Greenspan, we did this yesterday, chose to cut interest rates in response to an oil shock. Why? Well, because when oil shocks the market, it does have a deflationary pressure to an extent, longer term, in the sense that it can hurt the consumer. It can cause inflation, which hurts consumers. They spend less, jobs get lost, etc. So the Fed tried to make a preemptive call to cut the interest rates. The problem is the oil market stayed elevated for a while. Inflation kept going. And then with the interest rate cuts, inflation went even more crazy. So I think the Federal Reserve is unlikely to do that again. And so if you were to see oil remain bid, I think it is actually more of a dollar bullish force that, could persist. Dollar index has been quite resilient here. We went down as far as 95.5, 95.6 or so, and have since put in higher lows. And the question is this another one, right? Are we going to see this kind of move back towards the upper end of this range? We'll have to keep an eye on it. But again, some of the other bullish currencies, the Australian dollar has looked really strong. I listened to Alan, who I think he was in the chat. He might still be here. Alan did a post on Instagram talking about his bullishness on the Australian dollar, trading a basket of currencies or currencies against the Australian dollar. Aussie dollar looks strong. You have some decently good macro data. And if we take a look at the Australian dollar here, just take a quick look at this guy. Look at the technicals on this. The chart looks really good. You have just decisive price action to the upside here. And now testing right on up against the upper limits here. Now, I personally probably wouldn't trade it against the Aussie dollar. But if I were to go to my Forex scorecard, and I can actually filter for AUD, Aussie CAD, actually Aussie dollar is getting a bullish reading. That's interesting. Pound Aussie and Euro Aussie, I just know because I've been frustratingly waiting for pullbacks on this one. Nothing there in terms of a pullback. But if we look at Aussie CAD and Aussie dollar, those could be candidates. Now, again, I kind of have just a little bit more of a neutral to bullish perspective on the dollar. So it'd probably be Aussie CAD. Aussie CAD looks really interesting to me. If we draw in, let's just do this. Aussie CAD, price found support really decisively here. Looking at the daily, so we'll go here. I think Alan is probably already in this. I believe he is, but this is a nice little push off of this area here around 0.95. And we'll see if we can get back through the highs. I think from a momentum perspective, if we can get this kind of move, that looks really solid. We'll see. We got 10 minutes here before the U.S. stock market opens up. In terms of where things are wanting to go, Russell is, I did also look at a short position on the Russell, but I chose to go Dow instead. I noticed that we pretty much filled the gap on everything yesterday. You can see here's Dow, Nasdaq filled the gap, S&P filled the gap. So we'll see. Volatility completely got crunched yesterday. We went from a 35 VIX. We ended the day as far down as 25. So that is a huge volatility crash to the downside. So I'm feeling like in terms of risk reward, if you wanted to get, some kind of bearish exposure to the market, yesterday, at the open was the worst possible time. We discussed that quite a bit inside of the Discord. If you're going to get bearish in the stock market, one of the most tricky trades that I've ever seen is trying to get bearish the stock market after a weekend gap down. Like almost always in the last few years, that has been a short-term bullish move in the market. And so, I waited for the rebound. And of course, doesn't mean by any means that we're going lower for sure, but I felt that the risk reward was much better at this level than it was trying to do so on the open last of this week. Nick, don't reveal your position so soon. Why? What's the conspiracy here? We'll see. I've been on a bit of a win streak here recently, so I am due for a stop loss being hit, to be completely honest, and having that expectation is probably the best way you can set yourself up when taking a trade. Just assume you're going to take a small loss. And with my style of trading where I'm swinging for big wins, that is a fair conclusion. Most of the time I take small losses, and then every once in a while I catch the big one and it pays for a bunch of the losers. That's pretty much the way it goes. But we'll see. Gold, taking a look here. Gold is actually making a push on both the daily and the 4-hour chart. 4-hour range here, breaking to the upside. If I take a look at gold here, I'm just curious what bias we have here. Take a look at gold. Gold was, some score was added back to gold with the whole... Oh, and I think that was just a bug on my side. I don't think that was actually an error with the forecast. Maybe it was. Anyways, the jobs report was very bullish for gold. It was really weak. And so that, of course, is a positive. However, again, we can't pick and choose. We have to look at aggregate. And we did see a good round of growth data, which is bullish the dollar. So that puts a little bearish pressure on gold. So I kind of remain neutral. In fact, the fundamentals still suggest weakness for gold. And one of the reasons, watch that 2-year yield, guys, because that is one of the more confusing things to people here. We've talked about this many times. Hey, why is gold been, choppy or going down on the breakout of a war? Well, again, it's because look at the 2-year yield. The 2-year yield actually got bid. Well, let me say that correctly. Bonds got sold. The yields went up in response to everything because expectations for inflation rose. And when you are talking about gold, right, if you want to understand gold macro, it is a fear hedge. And so people look at that and they say, okay, so in a war, gold should go up. But also it is a interest rate sensitive asset. Okay. Central banks, what they are doing, let me just make this a bit bigger so everybody can see. So people are frustrated with gold because they're like, why isn't gold at like $6,000 an ounce right now? Well, because gold in recent years especially has been trading very, very sensitive to what central banks are doing with monetary policy, right? So people are like, well, why isn't, fear is high. Look, why isn't gold going up? Well, because again, you can't just look at one thing with macro. You have to kind of take into consideration the full story. It's an interest rate sensitive asset, meaning if they keep interest rates high because oil is high and inflation is high, what does that mean? That means gold's not going to get those same amount of rate cuts that it was thinking it was going to get. Why does gold like rate cuts? Well, rate cuts, just think money printing. Anytime you hear rate cuts, think money printing. Gold likes money printing. Less money printing, aka rate cuts, is bearish for gold. That's why gold has been sideways. We've got this one right? Is it a fear hedge? Sure. People might be buying some gold in worry of what's happening with the markets and what's happening with, the Middle East. But the interest rate story has been slashed. So you have a response in gold's price action that looks like this. Does that make sense? Give me a 1 in the chat if that makes sense to you. If that concept helped to explain a little bit as to why gold has actually been pretty range bound and back and forth, give me a 1 in the chat. I just want to make sure that that is resonating, because a lot of people have been very confused by that. I've seen a lot of people frustrated by it. A lot of people, I mean, candidly, a lot of people just bought the heck out of gold on the, last few weeks, thinking it was going to be easy money. And actually, when all this kicked off, it's been pretty much nothing but downside for the most part. Now, we've had some recent bounce back in gold, and I do still think that if you get, let's say, for example, we have CPI tomorrow, right? If CPI comes in cooler than expected, if we start getting some inflation reads that soften up the Fed for potential rate cuts, or, for example, oil prices chill out a little bit more, then yeah, gold could rise dramatically because you still have war uncertainty, etc. Nick, markets have already priced in 2 rate cuts for the year. What if they don't materialize? So Lee, that's pretty much what's happening with gold. Gold is sobering up to the possibility that if this, war goes on, if oil prices remain elevated, if inflation comes back, gold should prepare for less rate cuts. And if that happens, if we go from, we had 3 rate cuts potentially. Now we have potentially 1 to 2. If the Fed, kind of has to adapt and says, all right, we might only get to do 1 this year, then that is a bearish force for gold. So that's why I don't have this gold is an easy long for me. It's just not right now. It's, in my view, not an easy long given the macro. Easier trades out there right now are actually, not something that's, not a lot of people trade bonds, but short bonds is kind of a trade that actually makes a lot of sense to me on a rebound here. I didn't take this yesterday, but we did come back up into this range that we talked about. Short bonds is basically the idea you think yields are going to move higher. It's kind of a dollar bullish proxy right now, right? Because you're thinking yields move higher. Depending on how if you get a CPI print this week that is hot, dollar could be looking really strong. We have CPI tomorrow. Dollar index has softened up as we tapped into this resistance point, but let's see. If CPI comes in really soft, dollar could cool back down to 98. If CPI comes in really strong or higher than expected, dollar could press right back up towards the top end of this range, and maybe, just maybe, we get the follow through to the upside, depending on what happens with oil. Oil is the most volatile thing in this market right now. Probably the most important chart to be watching right now is oil, I would say. Nick, do you think gold has become more of a risk-on asset? No, it is still a risk-off asset. It's just that it does not. It's just that it's sensitive to rates, right? Gold score is wrong, Nick. Let me take a look. Oh, interesting. Oh no, it's adjusted to a +2, so it's a +2. It's got good technicals. I would agree with that for sure. Technicals look solid, but the macro is kind of limiting in my personal view. All right, guys, we are at the end of my session. U.S. stock market is just opening up. We'll see how things play out. Of course, I'll have a video out later for you. If you guys want to check out the free Telegram channel, by the way, we'll drop a link here in the live stream chat to where you can join us there. I highly, highly recommend. We do giveaways in there, and we, of course, do daily market commentary on what is going on. So if you're somebody who is still if you're getting the ropes here on your fundamental macro side of things, then join us in Telegram. We'll drop the link here in the live stream chat. There it is. Join us in the Telegram or scan the QR code to join. But we are posting daily macro updates from Alan, who's about to take over the stream, by the way, so you get a little bit of a teaser on his commentary in just a second. but we're posting daily updates on what is going on in markets to try and keep everyone up to speed. It's a great way to learn macro for free without spending any money. This is completely free to join, and you can start reading along with our daily digests written by, like I said, Alan, who is going to be taking over the stream. So with that said, up next, we're going to play a quick break. Don't go anywhere because we have Alan Perez to do a little bit of a macro, Forex, and markets breakdown for you. Stay tuned. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. My bad, I forgot to share my screen here. Hope everyone is doing pretty well here. Don't go anywhere. I just took 3 trades here, so I'll go ahead and break down those trades for you guys, my thought process, and how I plan to manage those trades here. So, yeah. So yesterday we had a little bit of a risk on day here. You did have yields drop lower, the 10-year and the 2-year yield as well. Looking at the 10-year yield here, I really faded off of this 4.2 level here, so I like to see that. But I basically took 3 trades here on the backs that there could be a possibility that there's some de-escalation talks, right? Some serious ones, if that. Oil did go ahead and drop from that almost 120 on Brent, and then 119 on crude or on West Texas oil. To go ahead and break down lower here, you did see the dollar index softening as well, which I like to see. Again, this is still up in the air. There's nothing solidified, so the trade can still go ahead and not work out. But I'll go ahead and talk over them. So I took 3 trades yesterday. I basically went along the Aussie dollar basket. So I went long Aussie US dollar. I went long Aussie CAD and Aussie Swiss. Both or all 3 of them are in profit there. So essentially I can, if I want to, go ahead and just move them break even. But I want to keep them open here as far as the stop loss level, because I want the trade to breathe out ultimately. So, but for now, they're all working out pretty well there. I'll go break down the reason why I went ahead and did that. For one here, if I just go to the top setups page and I just look up AUD, all of the pairs except for Aussie Swiss was bullish at one point, but then it's no longer bullish. But Aussie CAD, Aussie US dollar, bullish. I did like Euro Aussie and Pound Aussie as well. However, the price just has already left the station, so don't want to chase price on that front. So I liked Aussie CAD and Aussie US dollar. Aussie CAD, Aussie dollar, more speculative because you still have some potential dollar strength if you start to see this conflict become prolonged and you see yields higher and oil higher. Then the US dollar will continue to catch that safe haven bid. But I did like the relative weakness here in the dollar. I was listening to the segment before. That 995, this level of resistance that I have marked up, has been respecting it pretty good. You have these long wicks to the downside. So I like to see that, right? And also Aussie CAD. The Canadian dollar is essentially somewhat correlated to oil. So if oil does well, then the Canadian dollar does well. If oil does bad, Canadian dollar does bad. Right now, or yesterday at least, we saw the oil tick down lower. So I'm kind of betting on that continued weakness, hence going long Aussie dollar and shorting the CAD. So those are the 3 trades I took. I saw a lot of things that I like to see. If I just go to the asset scorecard, Aussie dollar as a whole is getting a bullish reading. So love to see that as well. I went to the COT data here, and we're just going to go ahead and make life easy. So we're just going to go ahead and do, we're going to do this. We're going to do Aussie. We're going to do Swiss. Yeah, let's do this right here. Give me a second, guys, but I want to make sure that you guys can see, without hurting the eyes a little bit here, but you can see that this is basically the COT data report for last week. Aussie dollar got a 2.7% net change to the upside. It was actually the strongest net change in last week's COT report. Swiss franc got a little bit of a neutral reading, but you did see the Canadian dollar there net change 2.42% to the downside. And the US dollar also had a very strong bearish change as well. So I saw that from the COT report. Love to see that as well. Again, there was just a couple confluences that I really, really liked. You do have the elevated inflation story across the board. If you do start to see elevated inflation, I think the Aussie dollar will be quite resilient. I mean, just looking at the price action here for Aussie dollar up there, right, during this whole conflict, March 2nd here. I'll show you this with the, actually, I want to show you this too. Go to asset scorecard on your Edge Finder, Aussie dollar here. You can see the score. The conflict happened March 4th. That's when the initial spike in oil happened. Ever since then, right, or March 2nd, I believe. Ever since then, Aussie dollar score has been strong. It's been a bullish reading since that. So it's been resilient in that front. So love to see that. Just looking at some economic data there, inflation right in the Australian economy. They are looking to go ahead and fight their elevated inflation by hiking interest rates. If you start to see global inflation trickle into every single major economy, the Australian economy will be starting from a higher vantage point. So they'll have to hike rates, but they'll probably have to hike rates faster and larger to go ahead and fight that inflation. So I really like the Aussie dollar long, the Aussie story as a general. So that's why I went long that whole basket. And yeah, so all trades are in profit right now. I put a breakdown in the Discord yesterday. I was having fun with Claude, and I did like this whole like research type thing, and I put it in the Discord there. So if you're in there, go ahead and check it out if you want to. And I'll keep you guys updated as we go through the trade here in the day. But we'll see how things play out, right? Like I said, if things escalate, and of course this trade could no longer be valid, and you can start to see more risk off trading, and then of course maybe you see a little bit of suppression on the Aussie. But for now, it's doing pretty well. How I plan to manage the trade? Well, we are hitting up this level here of what could be resistance. And as you see, right, these trades, like look at Aussie dollar, look at Aussie CAD and Aussie Swiss. You can see that they're one-to-one trades, so they're not like high risk to reward or anything like that. That's intentional there. For Aussie dollar, if we start to see a break above this level here, I'm just gonna make this red here for you guys so you can see it. Resistance right here. So if you start to see a break and retest above the situation or above this level, then I would just go ahead, and the situation would be that I go ahead and just trail stops a little bit and then let it go for higher. But for now, they're one-to-one trades. Until we see something ultimately resolve, solidify that things are coming down, then I would be happy and more willing to just let this thing run. But for now, you still have that risk. So if this thing continues, then I'll probably get taken out for a profit pretty soon here. Hey everybody, what's going on? Hey Johnny boy, what's up, man? Top setups have some glitch. Okay. Hey ball out, man. How you doing, man? Good to see you. Can you compare the AI again? Claude, ChatGPT, and Gemini? Yeah, sure. So I was just basically having fun with the idea of the different models. I'm trying to migrate from ChatGPT into the other ones. So I was having fun with Claude yesterday, and I was basically, for my own benefit, for my own fun, I was breaking down the Aussie dollar, the Aussie basket long story. And so I did that, and then Claude like pretty much did well. I basically said the prompt was fix any grammar errors and any structure, like professional structure that you would see on a traditional paper. And so yeah, I got that. So this is basically what I did. This was my campaign here. I discussed the risk, all the good stuff, the pair selection, why I chose each pair. So for example, Aussie dollar, if the conflict begins to de-escalate, the asset will most likely correct itself first, whatever. Institutional activity, rate projections. Oh yeah, I forgot to show you that. The other reason why I really like the Aussie dollar to the long side, or the Aussie basket as a whole, if we just go to inflation or interest rate data and interest rate projections, right? Let's say, assuming the conflict ends, right? That's a speculation, but let's assume that the conflict ends and we somehow start going back to trading on the fundamentals that we were trading on before, which is central bank policy. When you're trading currencies, you're trading interest rates. So that's very important. So basically what I was doing was looking at the interest rate projections for the Aussie against the US dollar and the Canadian dollar and the Swiss franc, because I'm trading against those. You can see that in blue here, the Aussie dollar is continuing or looking to go ahead and hike rates, and the blue bar is going to get higher. Same thing with the US dollar, right? It's in red, it's looking to get lower. The Canadian dollar in yellow also looking to get lower. So the divergence between those two interest rates, or all of those central bank interest rates, is going to widen. So making that relationship between the two stronger. So you always want to trade, when you're trading currencies, a strong currency versus a weaker currency. And so that's why I really love the specific basket that I chose. I could have gone long Aussie yen, right? I know you guys are saying that in the chat. Aussie yen was a good one. It's hard to trade this, right? Because it's just drifting higher, no technical pullback. Also, too, with the yen, I hesitated with anything yen as of now because you do have that intervention risk, right? So don't want to play that. I could have played like you guys are mentioning as well. Euro Aussie price has already left the station there. I would be chasing price, like there's a possibility there could be a pullback. So I don't want to do that. Pound Aussie as well. Same thing. Price has left, so don't want to go ahead and chase price. So those are all fantastic currency pairs. Don't get me wrong; they're very strong. They have a strong reading on the Edge Finder for a reason. However, from a technical basis, I just couldn't justify chasing the price there. Claude is the goat of AI. Honestly, Claude is very good for highly analytical requests, I would say. I like Gemini, and Nick put me on because I was trying to better my thumbnails, and I noticed that he was doing some cool thumbnails. He uses like Nano Banana for Gemini, so Gemini is really good for like that creative stuff. I just did, if you guys want to see on the A1 Trading Instagram, I did a post about the scenario backtest today. And if you zoom in into the headline picture, the dollar bill, the $100 bill, at the bottom right of that $100 bill, it says A1 Trading. So yeah, Gemini is really, really good for those things. So by the way, guys, details matter. Yeah, Claude and GBT the best. I'm trying to deviate from Chat GBT just because it gets quite slow. You have to open new chats and stuff like that. And the image generation is not the best. I think there's better AIs for that. Someone said, Alan, what do you think about dollar yen? Dollar yen, it's getting strong, I would say, relatively strong, especially now. You do have a little bit of a battle with the PM over there and the Bank of Japan. Ultimately, though, they do have elevated inflation. The Bank of Japan is looking to hike rates, but the PM is also trying to make rates lower. So you do have some conflicting views there. I'm waiting for a fast appreciation in the yen. If we do see that, then probably dollar yen at 160 would where I would be open to taking a very, very small position with wide stop and waiting for some kind of an intervention. Once you see confirmation of that intervention, then perhaps I can up my risk a little bit and then play the dollar yen to the downside, ultimately targeting something like maybe like 150 or 140 even. But yeah, that's kind of what I'm looking for, dollar yen. You could trade it to the upside, sure. It's strong, especially if you see another wave of escalations of conflict. But as of now, kind of staying away from dollar yen until we get to those elevated prices, and then I'll just trade it to the downside. What's up, Alan? Any thoughts on euro pound? I'm watching it at a head and shoulders pattern. Let's go ahead and look at the fundamentals first here. So I would assume at the moment from a price action perspective, euro pound's probably up on the day. But let's go ahead and see here. Edge Finder will go to minor currency pairs. Getting a neutral reading. Okay. Let's go ahead and see the price action. And then after this, guys, we do have Marco here joining me here. So I'm very excited for that. Actually, euro pound's down on the day. Yeah, wouldn't trade. It's getting a neutral reading. Hey, Marco.
Hello. How are you doing?
Pretty well, man. How are you?
I'm doing well as well. So I heard you talking about the Aussie, and I know you're in the Aussie dollar position. So you're actually planning to get out soon. You have a take profit in mind?
Yeah, I have a 1-to-1 take profit on all of the on all of the pairs here, just because you still don't have a complete resolution. Now, let's say hypothetically, we were to get a confirmation of some kind of resolution, then you would probably see oil continue lower, the VIX continue lower, the dollar getting a little bit soft there. And so Aussie dollar to the long side for an extended period of time would make sense. When it comes to, and this is just my personal preference, when it comes to trading in an environment like this where things can go either way pretty fast, I tend to try to shorten my time horizon in the trade. Because then you're at risk. The longer you're in the trade, the more at risk of something happening, and then it just takes you out, or vice versa. So I like to be 1-to-1 at the moment. For the Aussie dollar specifically, you are getting like this level of resistance here on the microstructure. Like if I go to a 4-hour time frame, So if we get a break and retest, I would like to see that. I would probably just trail stops and just make this a risk-free trade, and then just see
Yep.
what happens from there.
Yep. I'm with you. We got the news yesterday, so I can bring it up on Financial Juice. Be watches currency as inflation stays near zero. Okay. Market moving. Trump, it's possible I could talk to Iran. Trump war could be over soon. So those are all pretty much risk on plays. So the dollar went lower, S&P went up, oil went lower, and of course Aussie dollar benefited from those news. But it's not yet a concrete resolution of the conflict. So it's a step in the right direction. And I do think that Trump is trying to calm down the markets, because we do know that his policies are dictated by the price. We saw it a couple of times in the past. The biggest example was April 2025 with the crazy tariffs and the Liberation Day. So if oil goes up even more or has another explosion higher, we could see Trump come back in and calm the markets a bit. But we're back below 100, which is, I would say, kind of a safe area. As long as we stay around 80 or 90, I think the war can sort of drag on without a massive escalation. So just some rockets flying here and there. By the way, before we continue, I just want to post the link to the giveaway form. So if you want to participate in the DNA funded giveaway, in the comment section, you can find the form, fill it out, and all of the names will get entered into the wheel of names. We will then pick a winner. It's a 5K one phase account. And I also I actually passed the DNA challenge yesterday evening, just to show you. So it was a 25K two phase one, and I've hit the 10% mark. And this is purely using ChatGPT. So I'm pretty excited to see if we can pass the phase two and actually get on to the funded stage.
Nice, anyway, man. Congrats on that.
Yeah, thank you. Like the results so far with ChatGPT, what I do is I have a trade journal in my Notion, and I also use ChatGPT to pass challenges. So all of the performance since, I think, June 2025 up until now, ChatGPT is up like 41%, which is pretty nice. And like the drawdown, I think the maximum drawdown was 10%, which is not bad. Like 40% return, 10% drawdown. And it's great for passing challenges because it takes, I think, around, I would say, 10 positions in a week on average. Wow. So if I risk like 1% per position, you're going to pass those challenges pretty fast. I mean, if I look at this one, from when I started, let's go to the equity, let's go to the daily. So start date 30th of January 26, and I passed it yesterday, 9th of March. So like a month and something, a month and a half, you can say, which is pretty nice. Anyway, to get back to the charts. So I'm also in the Aussie dollar, and I've been speaking to Alan about this position behind the scenes. I do think this is a really good play. The relative strength of the Aussie dollar, the performance of the Aussie dollar has been extremely good if you look at the whole situation. Like you would expect for this chart to drop at least, I don't know, let's see, from that open, at least 3 or 4%. That really didn't happen. So the Aussie dollar had some relative strength. And on top of all of that, as a longer-term position, the Australian Central Bank is looking to hike interest rates, which is, of course, bullish. Fed is looking to cut, which is bearish. So even if you kind of take the war out of the equation, Aussie dollar is still a great position to own long-term.
Yeah, lots of good relative strength that we saw. Like you said, like usually a risk-on currency like this, you would see a sharper reaction to the downside. You didn't quite see that. And I also, too, yesterday, besides like on the Forex side, I like to look at a lot of things because markets are all connected in one way, shape, or form. And there was just a lot of good indicators pointing that it's a good maybe chance to take an attempt. And I want to say this, I want to emphasize this too. This is just an attempt at a long Aussie campaign. Right now, it's working out, right? But we did see a lot of basically indicators about risk on maybe benefiting here in the short term, medium term, or even long term. Right here, what I have on my screen here is a scenario back test tool for the VIX. We spiked 20+%, or more than 20% yesterday. It was actually like 37%. And the forward-looking returns, this is for the S&P 500, are pretty positive, and they tend to get a lot steeper the wider you put your time horizon. So the 1-day average return is almost less than 0.5% there, but then you get to the 1 week, 1 month, you're looking at 2.45%, and so on and so on. Also, too, from a sentiment timing kind of way, the put to call ratio on the S&P 500 there. Look at that, guys. This is just updated here. It's now above this red line, which means there's high put volume. So you usually want to take a contrarian stance on this here. Before it was just below, which in my opinion was enough, but now it's definitely up there. So basically, you can see that there's a lot of put volume in the market. Yesterday, the S&P 500 bounced off of this 6,600 level of support, also that 200-day moving average, and you see some buy the dip activity there. And then also just going to the COT report, S&P 500 actually did see a lot of buying there. So let me go ahead and show that to you guys real quick. Yeah, right here, net change of 1.67%. So again, just a lot of confluences that I like to see, pointing at this could be a good attempt at risk on.
Yep. I mean, we hit the 200 EMA on the daily, right? On the S&P. Awesome. Are you looking to get in?
No, I really wouldn't. There's still risks, right? I'm already in a position. I'm correlated a certain way, which is risk on. I'm pretty happy with it. I wouldn't say so. You do have some other like indexes that are relatively weak, like the Dow Jones here. There's still a possibility this thing can roll over, but when it comes to equities, I mean, it was good to see that risk on move, but I don't think I would go ahead and enter the market, especially now prices kind of left a little bit there. So if hypothetically, it would have been cool to have a limit order down here and then just tag it and shoot up higher, but I really wouldn't chase price at this point.
Yeah, my favorite, if I'm looking at the indices, my favorite is the Nikkei still. I think in 2026, the Nikkei will be a great sort of index to own. And if we do get a proclamation from Trump that the war is actually over, or that the conflict is done, that they have won and completed all of the objectives, I think the Nikkei can go flying. I think it's a better buy than the S&P. S&P has been struggling lately. The Nikkei has been just crushing higher. If it wasn't for this conflict, the Nikkei, I think, would have just exploded higher even more. So the whole situation right now in Japan is great for attracting capital back into the country. And you have the new prime minister. She's super dovish. You have the new government, super dovish. They are cutting taxes, putting in a lot of money into the economy. So if there's a proclamation of an actual sort of end of the conflict, I think just buying the Nikkei on the spot may be a decent play, because I think the Nikkei can go flying. Of course, you have to be ready. You have to have your alerts set. You have to be fast. But if you are, you see Trump posting, conflict is done, we have won, objectives completed. You basically open the Nikkei, buy it. That's about it. We can pretty much go back to the all-time highs. I think we started dropping right around at this level. So we can appreciate 7%, 8% minimum. Pretty good play.
Okay, that's what I was going to ask you too. If you have any specific technical levels that you're looking at to go ahead and get involved on Nikkei, but you're saying, as you see the certain characteristics start to form out there, you would do like a market long position?
Yeah, I would wait for the war to finish, because I do think that, yes, we got some good news yesterday. The markets took it as a positive development, but the war is still going on, and we had some repricing. So we had the move up from the bottom. Nikkei already moved up 6%, 7%. So now we're back kind of in the middle. If the war escalates, Nikkei drops. If the war is completely over, Nikkei flies higher. But if we stay in this zone where we are in now, I think we just remain flat. That's why I also with you on taking profits on the Aussie dollar and not staying in super long in it, because what is going to push this market higher if we just stay in this conflict where, yes, it's not escalating, but it's not dying down, it's not ending, if that makes sense.
Exactly. And the longer it gets prolonged, the higher that oil stays elevated, then it can start to have some effects on the currency market, making the dollar stronger. And realistically, here on the Aussie dollar, we are at this. We've been playing around in this channel here, and we're at the upper end of that channel as well. So if this thing stays for long, like to your point, Marco, yeah, we can just kind of just drift back and forth, and you don't want to be playing in that. Yeah. So yeah, I agree with you there.
Yeah. And do you think it can actually hit above these highs? Because I see where you have your sort of take profit set. So you think a quick sort of push up into those highs could happen?
Yeah, I have the this is just like for visual purposes here, but I have my alert here at this like this recent high here, 71.5 or 71.4 in that area. That's essentially where I'm looking to exercise discretion and say, if we have a break above it, like a decisive one, then I would just wait for the break and retest, or I just take my profits there and call it a day. I could also just take my profits there and then wait for a break and retest and enter again. But if I don't have to do that, if I can just stay in the trade and get this good price, then I'll do that. But that just takes a little bit of discretion and kind of balancing what's going on, the comments in the world. Is it going to hold some weight, and the fundamentals also too, because you still have some fundamental data coming out there. So just have to just use all the skills at your disposal. We'll use the edge finder, of course, at the time. As of now, we're speaking, it's a bullish score, right? So that could obviously influence things. If the score drops a little bit, then maybe you can say, okay, maybe we can just take profits for now and wait for another opportunity. If it gets increasingly bullish, then that's an even better sign that we can hold this thing for longer. So that's just the beauty, man, of having the tools that we have at our disposal. I say this every day, but I truly mean it. Like, the way I was able to filter out the specific basket of currencies that I wanted to trade was thankful to the edge finder. I could have done it by hand, sure, but it would have took a lot of time. And by the time I finished that homework, price would have left the station, because essentially what happened was we bought the Aussie dollar and it just started going higher immediately after. So thanks to the edge finder, I was able to catch those things very, very fast and make it a very informed, conscious decision. And it's working out great. So I always say that, like, there's a edge finder trial there. You can go ahead and sign up for that. I promise you that your life will be, or your trading will be, a lot better from that. And also too, I would say the Telegram channel, it's completely free to sign up and join it. I haven't posted the 2 chart markups here for today, but I will do so immediately after the stream. And it is free value, of course.
Yep. The best thing on the edge finder yesterday was the commitment of traders report, which you brought up, because I think the institutions have bought. So if you go to COT history, or sorry, the latest, they have bought the Aussie. So the net percentage change is the number I usually focus on the most, plus 2.7%. And also, if you have been watching the Aussie dollar in the recent few days or weeks, you would just know that the relative performance and how it's holding up tells you something. So for example, gold getting good news, bad price. So the war should have been good news for gold, but you had a sell-off, you had a bad price. That tells you something. And also bad news, good price, which happened on the Aussie dollar, tells you something as well. Tells you that it's actually a pretty strong instrument at the moment. And also Bitcoin, okay, it's being kind of flat here. But what do you think about gold at the moment?
So I think the score has improved a little bit here on the edge finder. Let me verify that. So it was a -4 at one point. Now it's a +2. We'll see how that changes. The fundamental score, this -4, is what's ultimately weighing it down here. So we'll see how that plays out. From a technical perspective, though, I do like that it's holding above this level, this 5,100 an ounce level. We'll see if we do see like the dollar really gets soft, yields drop there, then I think gold can go ahead and play like a little bit of catch up and trade to the upside. So I think as long as we're staying above this 5,100 an ounce level, I do think that this is a good level of support, and we can probably expect it to drift a little bit higher. But again, the contrary is if you see oil spike, if you see a yield spike, if you see the dollar spike, then this thing will ultimately fail itself and drift down lower.
Yeah, it's super funny that gold is acting like a risk-on asset. So if you look at the price,
It is.
So let's put up gold. It sold off on the war open, which stocks did as well, and now it's pushing higher on good comments from Trump. So it's acting like a stock, basically. It's acting like Bitcoin.
Yeah.
Pretty funny.
There was a lot of euphoric, impulsive moves on that Sunday open, that first Sunday open, where the method was just buy gold full ported, and people really got pinched from there. And I think now you're starting to see a little bit of a clean out type situation, and now gold's kind of starting to stabilize a little bit there. But there's also too that chance that after that, then gold starts trading like gold trades usually. So that's also something you have to be looking out for. But Marco, I'll let you go ahead and do your giveaway here for the DNA funded challenge.
Sure.
Thank you so much for the conversation, man. I think we're on tomorrow as well, as always.
Awesome.
So
Awesome.
I'll be looking forward to that, and then we'll go ahead and discuss the trade that we're in and how we, if things change, we'll go ahead and discuss that for sure.
Absolutely. Thank you for the joint segment, Alan. I'm looking forward to tomorrow, and good luck with the Aussie position. So let's see if we can at least hit a 1-to-1. That would be nice.
Yeah, man, for sure. I'll keep you updated, man. All right.
Sure. See you.
See ya.
So I'm going to post the link to the form for the giveaway one more time. So let's do it. Copy. Paste. So in the comment section, you can find the form. Go to the form, fill it out. You'll get entered into a 5K one-phase DNA funded giveaway. If you want to get funded, you want to expand your trading capital, definitely do check out DNA funded. So as I showed you yesterday, I passed the 25K two-phase phase one, made 10%, which in this case was $2,500. Pretty good equity curve, really happy with it. And this is only using ChatGPT. So this is a challenge I'm doing on my YouTube channel where I use ChatGPT to try and pass a funded challenge and also get a payout. So what is my next step? Well, the next step is a two-phase 25K phase two. Essentially, I need to make 5%. 5% is the profit target. If you want to get funded, we have a 25% discount code, which is A1 Live. So A1 Live gets you 25% off any DNA funded challenge. Okay. There's a big broker behind the company. I've had a great experience so far. Nick loves them as well. So with the code, you really get a good price. If you look at all of the reliable prop firms, there's very few in the space, but if you compare them with the code A1 Live, I do believe you get a reliable firm, and second, you get a great price as well. It's not like a 50, 60, 70% discount because those prop firms are scams, but 25% is like the best discount you can get with a reliable company. Okay, let's continue with the regularly scheduled program. Aussie dollar is currently the main position that I have. This was a signal in the A1 Discord as well. If you want to join, link is in the description, and you can use the code Marco to get 25% off. What is the game plan here? Similar to Alan. I like this position. I like being in it, but we have now sort of hit the equilibrium from the war. So the best temperature gauge for the conflict is going to be the price of oil. We have moved higher, aggressively moved higher to some crazy levels. Then we moved lower, especially when Trump mentioned that he's looking to end the war, or that the war won't last very long. we are now sort of in this equilibrium. Price is just around 87 to 90, which is, I think, fairly priced. So fairly priced for a conflict and not going crazy at 110, 120. The risk right now is, well, any sort of news, positive or negative, could move the markets. So possibly getting out of my Aussie dollar long could be a smart option, because if we get an escalation, this will happen, or it's most likely going to hit the stop loss. If we get the end of the war, yes, we will get an explosion higher. So maybe putting the stop loss at break even or having a take profit at the highs could be something that I will do. Of course, if I do make a decision, you will get all of the updates in the A1 trading Discord. Okay, let me check the comments. Let's see. The comments. Just a second. Thank you, Sluggy. Ray Beast is up 5% on a 50K DNA. Awesome, congratulations. I wish we could win a copy of the Edge Finder on stream. Nick does do giveaways throughout the year, so make sure you keep watching the streams, because Nick actually does a Edge Finder giveaway pretty often, as far as I remember. Okay. Let's see, I'm scrolling through the comments. Marco, you called it that Trump would declare victory early. Well, we did definitely get positive news. It's not a declaration of victory, but it's a step in the right direction. And what you have to know about Trump, at least what has been working so far, is the markets dictate what Trump does. So Trump uses the stock market as a scorecard. If the stock market is going up, he's happy. And he believes his voters are happy as well. If the stock market goes down, he's not happy. His voters are probably not happy either, because he started the war. But in his head, it's all about the markets, which is good for traders. I'm not going to lie. So Trump is really, really good for traders, because he introduces a lot of volatility to the markets. And volatility is exactly what we need to have an edge to make profits. So once Trump is no longer president, it's going to be a lot less boring and probably a lot harder for traders to make money. You need volatility. So that's just how things work. Because the stock market started dropping heavily, and because oil prices went to 120, meaning inflation up, meaning energy prices up, meaning US companies struggling to get their energy, meaning even more downside for the US stock market in the future. And you have midterms coming up, and the inflation directly impacts US citizens at the gas station. So the whole story put a lot of pressure on Trump to say something positive and to probably think about heading home. I mean, they destroyed most of the big targets. They can't destroy anything else that will reach headlines. So they destroyed the whole Navy. That was a headline. They destroyed the nuclear facilities. That was a headline. So there's nothing else to destroy that would get a lot of views and eyes and headlines. That's why I think they kind of completed most of their objectives. But we will see. We will see. No one knows. No one knows. So you have to position yourself accordingly. For me, this Aussie dollar position is small risk. It's not a big position. So if I do get taken out, it's not going to be like a game changer. It's not going to destroy my account. Time for the giveaway. Time for the giveaway. Today is the 10th of March. So let me look at all of the names. Quite a lot of entries today. Great. Let's copy the names. Then we go to the wheel. Spin. Okay. So let's see who is the winner. Leo. Yeah, probably Leo. Yeah, Okay. Leo C, congrats on being the winner. I have your information, and after my segment, I will send you an email with the free 5K one-phase DNA funded account. If you didn't win, but you want to get funded, you want to do, let's say, the 25K two-phase account, which I would personally recommend. I think it's the best value. Definitely consider using the code A1Live to get 25% off. Okay, check it out. I still have 4 minutes from my segment, and then we have Tiger coming on, if I'm not mistaken. So I want to look at gold. I've been doing some research, doing some reading, and a couple of traders that I follow are bullish on gold. I thought about buying gold, but I don't think it's the right thing to do at the moment. Edgefinder is... Whoop, let's just go to the top setups. Gold. Edgefinder is neutral at the moment, which doesn't really give me a lot of confidence to buy. If we get a total de-escalation, if the conflict ends, I wouldn't be surprised if gold sells off a bit. But if we do get an escalation, if the war lasts for months, maybe even years, yes, then gold will absolutely go flying. So at the moment, I'm not looking to do anything. But if the Edgefinder flips to a bullish score, and if we are close to the 20 MA, I will most likely take an initial buy position. So it's a bit tough. It's a bit tough. Gold is not really acting like a safe haven. This selling of gold when the war started was a bit confusing, a bit problematic as well. And with the recent comments, it seems like we're headed to a de-escalation. You know, it's possible I could talk to Iran. War could be over soon. That sounds good. That sounds good. You know, it's Trump, so you never know what kind of a game he's playing, and if he woke up on the left side of the bed, or whatever the expression is. So you never know. But I think looking at Trump's past actions, when the markets go crazy, Trump chickens out, and he usually does a taco. So he usually reverses his crazy decision. So on gold, let's put it back on the watch list. Let's put it back on the watch list just to have it up there. Oil prices, I'm not looking to do anything. I think the edge is gone. If you manage to get in and buy oil, congrats. For me, I didn't trade it. Oil is something I tend to stay away from. Super volatile, very much impacted by geopolitics, and I have very little experience in trading oil. So last thing for today, for my segment, what can we look at? Crypto maybe? Silver? Silver, I don't like silver at the moment. But Bitcoin, let's take a look at Bitcoin. Bitcoin actually had some relative strength, showed some relative strength last week. After the war started, Bitcoin was the only thing that kind of went higher. By how much? Maybe like 10%, which in Bitcoin world is not a lot. But it is still a good sign. It's still pretty interesting that the relative strength is there. So yes, overall, we're still stuck in a flat range. But if we start to show even more relative strength, if we start to get some more bearish news, but Bitcoin pumps, it's a very bullish sign. You have to pay attention to these things. If you get good news, bad price, something is off. If you get bad news, good price, like you got on the Aussie dollar, that might be a good opportunity to buy that specific asset. So you actually got bad news, good price on Bitcoin as well. And looks like all of the sort of the leveraged longs or shorts or like over leveraged players are out of this market. Looks like that there's not a lot of sellers present on Bitcoin at the moment, which is good. So keep an eye out on that. Let me quickly run it through the Edgefinder to see what's up. Neutral score. Okay, fine. So that is about it from me. Don't go anywhere because you have Tiger coming up after me. Again, if you want to get all of my trades, all of my positions, all of my thoughts, consider joining the A1 Trading Discord. This was the last position that I took. I also had a great position on the Nikkei, which I recently closed for plus 2.6. So I've been doing pretty well, and I've been having sort of a winning streak, which doesn't last forever, but it's pretty good to see it. So thank you for watching. Good luck in the markets. Be careful. Small risk because we're still in highly uncertain times. And I will see you tomorrow. Goodbye.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
What's going on, everybody? Happy Tuesday morning to you. Happy Tuesday morning here in the States anyway. Happy afternoon across the pond if you're watching from overseas. Yeah, thought we would take a quick look at the currency strength index real quick, guys. I think so far this week, the only real things that have affected any of these currencies that we're watching right now has been the Japanese GDP report that we did have come out. Okay, that was actually a pretty nice look for Japan. Gave them a little bit of strength as well. They were kind of hovering down around the 40s, okay, the low 40s, 40% as far as percentage of high impact economic events that have exceeded expectations. So get to add another one to the list for the yen. So it's looking a little better than it did yesterday. And the only other thing I've noticed so far has really been China's CPI. Now, they had a bullish reading over here as well. And just keep in mind that it's a good idea to follow what China's doing, especially if you're a trader of the Aussie dollar, because that just so happens to be their, one of their largest, if not the largest trading partner is China and Australia. Okay. Australia's biggest partner. So I like to keep an eye on China from time to time as well, just to see, if that affects, a really good report for China can give a boost to the Aussie as well. If China catches a cold on something, it can have that indirect effect potentially on the Aussie. So that's the only 2 items I've seen so far come out. We've had just nothing but yesterday and today, just, real light impact events. We don't really have anything big coming out until tomorrow. That's when we've got our inflation numbers here in the States, where we are projecting to keep the percentage is the same at 2.4 on the year-over-year number. Our regular weekly unemployment claims on Thursday, and then Friday is really the biggest day from a high-impact event perspective. That's when we got the pounds GDP report, where they are projecting a 0.1% increase. So obviously would be a nice boost for the pound. And then Canada's employment numbers come in. They are pretty high on their unemployment rate, guys, and they're projected to go up, looks like 0.1% higher right here. So 6.6%, not the greatest. Dollar, we got the Fed's favorite gauge of inflation coming out, 0.4% for the PCE, the personal consumption expenditure. And that is, forecast to remain the same. The GDP, 0.1% higher here in the States for the GDP, and JOLTS with about 250,000 more job openings scheduled. So we'll see how that all happens. I like days like today and yesterday because for me as a supply and demand zone trader, it just makes it to where, and this is probably true with most any other, trading strategy, but there's less headaches. There's less things getting in your way. So, I like to look at pure supply and demand strategy and not have to worry so much about the high impact news events affecting everything. So I love obviously the red folders because it provides that much needed, volatility, much like what Marco was saying with President Trump. Okay. With Trump, we get a lot of volatility. So yeah, we definitely like the volatility, but sometimes it's just nice to take a little break, and just focus just on zones. So, but it's all about the balance. But anyway, so yeah, just finishing up on the index over here. Aussie remains the strongest currency right now. Again, that Chinese report came out that was good. So this, again, more of an indirect positive for the Aussie. And then still the pound at the bottom, guys, 20%. So I did on this note take advantage of the Edge Finder's -6 score on the pound dollar. I know a lot of us have been kind of keeping our eyes on it, and it did take a short yesterday. So still in that trade, obviously short the weakest currency and long the dollar, which, kind of like what I've said in the past, anything really 60 or above starts perking my ears up a little bit. Hey, where can I go and try to buy this currency? Same is true in reverse for the short side. Anything under 40%, hey, it's a nice weak currency. I want to try to sell that any chance I get. So yeah, matching up weakness here, short and weakness, buying a little bit of strength in the dollars. So I'll take a look at that. I've got a few alerts, but feel free, guys, if you have any specific tickers of any type you'd like me to check out from a supply and demand zone perspective, curve analysis perspective, anything of that nature, let me know. Just throw it in the chat. But as far as the pound dollar, so I really had a choice here, guys. Okay, I really had a choice. So, number one, we're trending downwards, which is great. My 50 is below my 200 here on my execution time frame. I was looking at a couple zones on this. Okay, I was looking at this little 4-hour candle here, and then on a 1-hour time frame, if we go down, okay, I was keeping an eye on this 1-hour supply as well. Now, we do have a gap, so I figured that was going to probably come into play, and this one here probably would get chewed through because I might have mentioned this yesterday, but to me, this zone, the one I colored light red, the one I changed the shading on, it's just a little bit too narrow. It's a little too skinny, guys, when we're kind of, comparing it to the candles around it. Got some big expanded range red candles coming out of it. I don't know. To me, that just looks like a little too narrow. So I definitely don't want to put all my eggs in that basket, especially when we have a gap to fill. So I ended up incorporating this as kind of a zone on top of a zone. I just kind of draw that in like this. Okay, I just made this basically one big zone like that. So I took advantage of two supply zones, right? Kind of combined. That's a zone on top of a zone. Okay, that's an extra confluence all on its own when you got zones. So, the safest way to do that, the safest way to go about it is just incorporate both and throw your stop loss on top, like I did. So I've got my stop loss up here about about 495. In fact, I probably should even went a little higher because we do have a form of resistance line, that blue dash line you see up there. And obviously, not to mention the big round numbers. So anyway, I'm in this trade. I've currently got my stop right here at 495. Because the very aggressive way to get into this trade when we started bouncing into this lower zone, and that gave a pretty good signal to short, by the way. The very, very aggressive thing to do would have just been to put a stop loss above that zone, but it's just not worth it. Not when we have a gap to fill. Those gaps like to be filled, guys. They don't always happen immediately. Sometimes it may take a while, but you always want to keep in mind these gaps. So yeah, for me, it just made sense to throw my stop loss above whenever I got into this trade. And then as far as take profit, I've got it down here where you see the green line. When I got into this trade, it's because our 50 was under the 200. We obviously pierced the 200 going into the zones. And then what we started getting when we bounced into that lower zone, the one that ended up failing, was we started getting a lot of wicks. So the buyers kept trying to push into that zone and the sellers kept rejecting it. And rightfully so, because we have unfilled orders. Even though it's a narrow zone and not as strong as I like to see, we still had a lot of sellers there, guys. Because think about it, back here, the sellers were able to push price down and break some structures along the way. So I have to be aware of that area because it very easily could have caught an ask from there and just completely plummeted. So anyway, I took into account both of them just to stay conservative about it, put my stop up here. That really gives me about, as far as, excuse me, as far as profit target. Okay, so that's 140 pips. 140 divided by 2 is 70 pips. Now that's a little wider of a stop loss than I personally like to use. On trades like this, I like to keep it around 50. 50 is a nice round number, but I still went ahead and divided it by 2, 70 pips, and that's where my stop loss is. So it's basically a 70 pip stop loss from this point. And now I'm glad I did that because what happened? Well, we eventually pushed through that bottom zone, closed the gap, and now we're bouncing off of this 4 hour, but this 4 hours also got a 1 hour. So there's a 1 hour, that's a 4 hour, 1 hour supply zone confluence, guys. So that's exactly what we bounced into, that white dash line there, the 1 hour zone. So in this trade, just going to let it do its thing. Excuse me. And step away from it. Okay. I don't want to micromanage it. I'm just going to let it do its thing. And, we've got, today's Tuesday, we got tomorrow, we got basically 3.5 intraday sessions to go. So that's a lot of time for this asset because I do believe it moves about 100 pips a day, if I remember right. Yeah, right at 100 pips a day, looking at our average true range down here. So more than enough time for it to complete its journey. And yeah, that's pretty much that on that one. Excuse me. Hello, Tiger. Does using VSA need an understanding in auction market theory? Sounds like a futures trading type question to me. When I think of auction market theory, I think of the footprint chart. I think of, looking at the candles under a volume footprint chart, and seeing all the different amounts of buy and sell orders that are within, the segments of that candle. Yeah. I don't want to say auction market theory. To me, VSA is just basically showing where the ultra high volume is. It's showing where the low volume is. I mean, it's basically showing institutional footprints, guys, as far as I'm concerned, because with us retail traders, we don't have, multi-million dollar accounts. We don't have billion-dollar accounts like those guys do. So when we're placing our trades, we're not going to be able to grow these candles that much down here. Okay. When you see the yellow candles, especially when you see the red candles like we have back here in the past, this is ultra high volume. Why is it? I didn't give it the title. That's just what they call it. But it's basically saying, hey, we got a hell of a lot more activity taking place right here than we did in the relative candles. So it often happens. It often happens when we get to a swing low or a swing high, like we see here. Price is in a nice downtrend. We get down to this point. And this is where the banks, this is where the hedge funds step in. We know that because we've got ultra high volume. We've got a lot of trading activity taking place. Some people think of this as like a tick chart. I just think of it as an activity chart, an institutional activity chart. So when I'm buying into a zone, I want to try as hard as I can to make sure that my leg out candle is giving me, one of these ultra high volume spread analysis candles. So I don't know really so much about the auction market theory. Some of my buddies I used to work with at Ola Prime, now they are the futures trading demons. Let me tell you, they could tell you a hell of a lot more about that than I could. A good person to follow, if you are interested in that stuff, I can actually recommend you guys somebody. And I know Trader Nick knows about him because he did a segment with him a while back. This guy right here, guys, at Sammy Saleh Futures. This is one of the guys I worked with. This is one of the coaches I worked with. If you want to ask about auction market theory and not to mention footprint charts on the futures specific side, guys, go talk to him. He does a live stream. In fact, he's live as we speak. So you could go check him out at Sammy Saleh Futures. Yeah, I don't want to even attempt to answer auction market theory because I don't quite honestly understand it myself because I'm not really so much a futures trader. So yeah, go talk to him. He's very cool. You can send him a chat and live and he'll answer all your questions as well. So good question though. The volume indicator, yeah, it's VSA. It's volume spread analysis. Guys, you can find this on Trading View. Just go to your indicators chart and type in VSA. And it's going to say right here, volume spread for VSA by Harry Brisant or something, it looked like. There's a description in there as well. With any indicator you guys use, okay, there should be a little description somewhere here about the script. Maybe that's it. Yeah. Okay. About this script, and it'll explain kind of how all your indicators work. I don't know if you guys knew that or not. Okay. But this is the example for volume spread. So just to recap that before I move on. Yeah. Just remember, just go here to your 3 little dots, click right here on about this script. And that's with any indicator you guys use. Okay. The developers of those, the coders and all that, they typically put a description in. Dollar Swiss says laughs bundle. Let's go look at it. I do know it's given a neutral signal. Now, I don't know about you guys, but for whatever reason, my top setups is not loading correctly. So what I ended up doing was over here on my other computer, I actually just took all the scores and had Grok add everything together. I kind of cheated the system. So Dollar Swiss, if this is correct, looks like it's right at a 0. So we'll go look at the technical side for you here and see what we've got. Dollar Swiss, Dollar Swiss. Now remember, the Swiss, just from a currency index point of view, is giving us a fairly weak score. Okay. It's only exceeded on 1 out of 3 reports, high impact reports, while the dollar is closer to 2/3. So dollar is definitely giving us a stronger fundamental vibe than the Swissy. So let's go have a look. Need to turn on my moving average. So if we're looking at highs and lows, we're definitely on a daily chart getting those higher highs, higher lows. Our 80 MA, which is the dark red line, is slightly above the light red, which is the 21 EMA. So our faster moving average is above the slower one. So that's confirming our uptrend. Okay. So that's definitely an uptrend, definitely buying, if anything. So taking a look at supply and demand areas, I kind of already looks like I drew this out yesterday. Our curve analysis, guys, our swing low down here, our swing high, break it into thirds and find out where our discount zones are, find out where our premium zones are, and find out where the retail chop zone is. And that's currently where we're at. Okay. I don't like to diddle in the middle. I don't like to trade and play around in the red, because that's typically where people get their behinds, handed to them. So obviously, if you're looking at that zone, if you really like that zone, we are kind of bouncing into the former resistance area from back here in the past. But if you're looking for a good potential spot, I've already drawn up a couple demand zones down here. Now this is a 4-hour chart. And let's see here. So the closest to the origin of the overall strong move, that's obviously going to be down here, guys. This candle at the very bottom, if we take a look at this candle, okay, we have a wick that goes up here. That wick touches this body to the right, 2 candles. So that to me says I cannot utilize that as a demand zone because it's an efficient market. Remember, banks love inefficiencies. Inefficient markets tend to produce liquidity pockets just on the opposite sides of them. So if I'm looking at demand with a gap, then I'd be looking at this candle here because of our gap. So if I just draw in my gap for visibility's sake, guys, there's our acceleration gap, or runaway gap, fair value gap. Okay. So this is showing us where our inefficiency is in this market. And remember, banks like to attack the liquidity as close to the origin of the strong move as possible. If this is the origin, then this would be the demand zone that I'd be wanting to buy from. So I'm asking for it to, obviously drop about, about 60 pips or so. Let's go measure that just so I'm accurate with it. Yeah, 60 pips. So just basically, if I were to go and buy this asset, I'd be wanting it to give me a 60 pip discount. Let's close the gap and let's attack the unfilled orders on the opposite side. Okay. Now, when price comes down here, this is where VSA comes. Okay. When price gets down into our demand, I would like to see the VSA candles down here start to grow on a smaller time frame. Go down to a 1 minute, a 5 minute, a 10 or 15 minute, and just see, hey, are we starting to possibly get some of these yellow, or better yet, red candles growing? Because if that's the case, then that tells me that that's institutional type volume starting to enter the market. Okay. because they're seeing the same discount I'm seeing. They're seeing the same unfilled order patch right here. They're seeing that gap, knowing there's an inefficiency there. So if I start to see the VSA candles grow while price has entered the zone, and then give us like a bullish engulfing candle or a candle with a bullish candle with a wick underneath, that's a heck of a place to buy and then take price up to, to the next supply zone. So then you would start looking for the origin of the overall strong move down, right? Well, we're up here. I mean, that's definitely the closest. That's definitely the origin of the overall strong move down that we're currently experiencing. But somewhere along this area, we have to pay attention to some, supply zones. They could form. Now, right now, I think that we've got it looks to me like we got a fairly efficient market through here. So all these wicks you see, if you look to the second candle over, the two candles to the right of every one of these candles, looks to me like they're overlapping. Okay, the bottom of this wick here is touching this wick here. Obviously, this wick is touching here. This wick here, is that one touching? Let's go look. Yeah, see that wick right there is touching these candles. See, these are efficient markets. Price likes to pass through efficient markets and attack inefficiencies. So I'd be looking at some supply up in this area, maybe go down to a 2 hour, 1 hour, just see whatever would give me a gap. The whole point is look for a gap. And here we go. So if I'm looking for a supply zone, okay, there's one right there. So I would be wanting to, if I buy long at that demand zone at the very bottom and price goes in my favor, if we're looking at this as a multi-day trade, maybe whatever, week, 2 week trade, I just would want to make sure and sell out of the market potentially before that supply zone. Because if we bounce to that supply zone, what's going to happen? Unfilled orders could potentially take over and take away all of our unrealized gains. So, that would be the farthest point I'd be interested in. But you never know. Somewhere in this area, as price continues to develop, if we get a strong drop down, if we get a gap, hey, we gotta keep in that gap. We got to keep that gap in mind because there could be a supply zone on the opposite side of it with unfilled orders. So yeah, just to finish that off, be looking for something like that. Okay. As always, not financial advice, but if I were to put my money on it, that's what I'd be looking at. And I would ignore this demand zone, by the way. I might as well just delete it because this is our farthest gap or our closest gap to the origin of that strong move up. So that's supply and demand basics. But yeah, not to mention all the nuances, looking at VSA, looking at, ATR, how much time do I have before the weekends? Does that asset move fast enough to get to my destination by the time the weekend hits? Because I personally don't want to be holding trades over the weekends. Okay, that's just my taste. Now, if I'm trading a higher, if I'm trading a weekly into a daily, well, then I'd probably be looking at a stop loss of 100 pips, 150 pips, 200 pips, okay? Looking for many more pip gain, 300, 400, 500 pip gain. If that's the case, it's a little easier to stomach holding a trade open over the weekend, right? Much like Nick held his gold trade open for what, a month? I think it was. He had a wide stop loss, right? I don't typically get on those time frames. I'm typically getting into my trades around 4 hour, 1 hour time frames. So for me, my stop losses are usually, anywhere from about 30 pips on the low side to around 50, 60, or in the case of the pound dollar, to 70 pip. So I just don't have the stomach to hold a trade open over the weekend. So hopefully that makes sense, guys. And I got 5 minutes left. Wow. Good grief, time flies. Did want to mention, guys, keep in mind, Trader Nick does have his A1T35 code for Ola Prime. You could get a 35% off Ola Prime accounts. There's a QR code there as well. And again, guys, I freaking love it. I love their platforms because they have trading, Trade Locker. I don't know if any of you guys have ever used Trade Locker. It's very quickly become my favorite. It's just so intuitive and easy to use. I mean, here it is over here. Okay, and there's my pound dollar short that I was telling you guys about. So it's just a really simple chart to use. I love it. uses trading view charts. So yeah, if you guys are looking for anything, let me know. And again, you can find on all the socials at Trade Like a Tiger, over here on YouTube, Facebook, X, Instagram, TikTok, and Reddit. I've got 6 of them. It's insane. Hard to keep up with them. And one other thing I wanted to note, guys, I did over the weekend create a video talking about my trading, my daily trading SOP, so standard operating procedure, screen setup, just to give you an idea of, you know, if you're looking for a system, it's good to have a system. It's good to have a trade plan. Okay. When we started, I had my trade plan opened up over here. Okay. It's good to have this written out. And this is just my trade plan. You guys can feel free to look at it. I don't mind. But to open your computer every single day and have your trade plan staring you in the face, guys, to me, that's important as just a daily ritual. Hey, Tiger, remember, you got to follow the fundamentals. Hey, Tiger, what's the relationship between the dumb money and the smart money? Hey, Tiger, where are your technicals? Are you following the curve? Are you following the trend? Are you following supply and demand? And all the different, you know, odds enhancers and things I use. And to actually have it spelled out, guys, this is cliche, and this is probably one of the most boring things you've heard in trading is get a trade plan. But I promise you, it took me years to get my trade plan developed and years to get it written down. When I finally got it written down and had it staring me in my face every single day, that's when I quit breaking these rules. Okay. These are my rules. This is just the algorithm, my personal algorithm I've come up with over my 12 years. Okay. I've taken away things as I haven't needed them anymore. But the bottom line is, you know, I use Excel. I like to use Excel to create it just because it's easier to move stuff around. Get a trade plan. If you have any questions on trade plans, again, guys, definitely hit me up. I can help you with that. That was the first thing I got taught, along with risk management and supply and demand, when I went to Online Trading Academy, was writing out a trade plan. And I fought it for years. I didn't write one out. And then I started wondering why I was inconsistent. Well, it's because I wasn't looking at my rules. My rules I set upon myself. So, you know, why am I going to break my own rules? Well, it happens when you don't have it in front of you. So hopefully that helps. If you guys have any questions on that, let me know. As far as the rest of the day, I've got 2 minutes. Aussie Kiwi, looks like we're getting a plus 11 at the last time I looked. So I'm going to keep an eye on these Aussie pairs. Aussie Kiwi, Aussie Yen, Aussie Swiss, and then the dollar. I did want to take a quick peek at that. To me, it feels a little bit like a risk-on day, guys. Yeah, see, we're still a ways away from my demand zone. Yesterday was obviously a risk-on day, but we are getting a little bit of a pullback on the Dixie, not to mention the VIX dropping. So this is the fear gauge. Keep that in mind, guys. When this thing spikes like it did the other day, it's because everybody's freaking out and there's volatility left and right. So we're kind of coasting down. But when we look at all the risk-on currencies like the Aussie, okay, the Aussie's up. The pound is up. Canada's up. Okay, risk-on currencies. So we're looking at euro up, and then the New Zealand up. So all the risk-on currencies appear to be up today. And same thing with, and then yeah, like Marco I think was saying earlier, gold and silver just aren't really acting right. They're kind of going against the grain, so to speak. So. Yeah, could today be a continuation of yesterday? Okay, we had a bunch of risk-off days in a row, but so far it's looking like a risk-on day. So just be careful, guys. I know it's end of my time, but if you have any questions, again, guys, on trade plans, on order of operations, SOPs, if you need help with your trade plan, okay, I can help with that as well. So just hit me up, guys, at Trade Like a Tiger on all the socials. Be happy, send me a message or whatever. And we can definitely get you some help there. So with that, guys, it looks like it's the end of my day. Have a wonderful day. And we'll see you tomorrow on Hump Day. Get ready for Hump Day. Peace.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.